Hey guys, what's up? Hitori here. Welcome to episode 32 of the weekly market outlook with TradeXProp. Now, in this episode, I'll be covering the dollar index, pound dollar, gold, NASDAQ, and Bitcoin. If you have any other asset classes you would like me to cover, just leave a comment down below, or even better, join our free Discord where you can talk to me as well as the team here at TradeXProp. Alright, now before we get into the DXY's technical charts, let's kind of rewind and chat about the fundamentals a bit. Last week we saw PPI and CPI coming out, and it's got everyone talking. CPI, it ticked up slightly, and PPI it also came in a bit hotter than expected. When you mix those results with higher unemployment claims, you've got a bit of like a seesaw effect, where we are seeing signs of a cooling labor market, but still we are seeing rising prices as well. That combo in itself, high CPI, high PPI, high unemployment claims, is not exactly ideal. It's what economists or people, they call it stagflation. But for people now, what you have to know with this scenario with stagflation is that it seems to have at least locked in and confirmed expectations of a Fed cut next week. The real question is, what happens after the rate cuts. That's something that we are still looking into discovering as we see more of how the market reacts when the rate cuts drop. And the US economy, for one, it's been full of surprises this year. It's stayed stronger than many have expected. Even when other central banks like the ECB or the Bank of Canada, they've been busy cutting rates. The Fed, however, it's moving a bit more cautiously, right? And the market doesn't see as many rate cuts on the horizon for next year as we had previously thought. With maybe quarter 2, quarter 3 of the year, and this just kind of leaves people wondering, how are we going to see the DXY react in the midterm to the long term, at least. Globally, at least central banks, they are making moves. The ECB cut rates again. The Swiss bank is also surprising people with a bigger cut. The Bank of England is also under pressure after very, I wouldn't say very, but at least weak UK GDP figures, right? They've come in weak for the past 2 reports, and then suddenly here we have it, the US dollar flexing its muscles all week, gaining strength right here in this movement higher, and then just showcasing that it's crushing the other major currencies like the euro, the pound, the Aussie. It's just crushing them. Whether it's central bank policies or potential hints of fiscal changes ahead, the dollar, at least where we currently are, is staying firmly in the driver's seats when compared to other currencies. So with that in mind, we are moving into the middle of December. We're actually in the midpoint of December right now, and once again, normally when we come into these kind of like end of year type scenarios, the market can be expected to move a bit slower than usual. It can be less movements intraday or intra-week at least, but it doesn't mean that it's gonna be slow, right? But last week of the year tends to be kind of like a dead zone for me, so I probably won't be looking at the markets during that time. But as of now, we still have maybe a week left of good price action. So let's see what we can expect coming into the week. So right here, this is where we currently are on the DXY daily chart, okay? And large movement higher is where we previously came from. We came back down, we tested support at 105, and then we're pushing higher as we speak. And if you look at where we currently are, we've been bullish for like a very, very long time. Since September of this year, we had this bottom out, crushing through these areas of resistance, and then we're just flying higher. So coming into next week, it's a bit tough because of where we currently are. Last week presented a really good move from here. Like I said in the forecast, we could expect price to continue higher into this resistance, and if we break it, we could do a break and a retest, and we're kind of nearing the end of that move. So for next week, I kind of want to see if we can come closer into this area of structure right here, maybe even at around this 107.5 price point. Could we see a potential reaction off of this for a potential pullback, or are we going to come up to it, break it, do a retest, and then continue higher? That's something that is still, it's left to be seen, because we haven't gone through that rate cut yet next week, which we will see the market likely react to it. But since it's pretty much been locked in, at least the results in terms of a rate cut or not, I'm not expecting the market to show like a huge, crazy, out of proportion, big daily wake up, wake down type scenario. I think the markets might have a bit of movement, but I think that's going to be about it, right? It's going to be a quite toned down movement as comparatively to other, previous CPI reports. So for next week, being where we currently are, it's not a favorable scenario. Like I said, I want price to kind of push higher, see if we can get any reactions from this area maybe, or maybe higher right here. Or are we going to come down, form support, and then tick higher into this previously formed area of resistance, and then push down during the CPI report? It's also something that's completely possible. But as of now, there's no clear structure nearby other than these two at the moment, right? We could see price also come down, retest this level to go higher, but as of now, there just really isn't any structure points I'm willing to take, because I would say that we are actually in kind of like a area of a big range, right? We've come up, tapped this, come down, and now we're just ranging in between that larger compression, I'd say. So ideally, I will want Monday, like the early parts of the week, like Monday, Tuesday, Wednesday, to showcase to me if he wants to go higher or lower into any of these areas, and then maybe with Thursday and Friday we could get a good reaction off of either of these levels, and then push up or down from there, and then you could get a good trade to end the week. Okay, because moving into next year, I don't want to have any conclusions that we're going to be moving up or down, based on these structure points. All right. So once again, always do consult your econ calendar. Right here, we have next week's USD news releases in local Malaysian time, GMT +8. We have news on Monday and Tuesday. We read retail sales and PMIs. There's no news on Wednesday, but on Thursday, we do have the Fed funds rate. So that's something interesting to look at. Like I said, it's pretty much confirmed to have a rate cut. We just don't know how much of the rate cut we're going to see. I think the consensus is a 25 basis point rate cut. So do keep your eyes peeled for that. Okay, and Friday we have core PC coming up. So overall, based on this picture alone, looks like a week of momentum is going to be coming up, and traders love that. Just make sure you are protected when you trade our challenge accounts as well as funnel accounts here at TradeXProp. Do keep in mind that we do have news rules with those accounts. All right. Okay, now that's pretty much it for the DXY. Let's come into the next pair, which is the pound dollar on the Ovenda data feed, right? So we've pretty much topped up in this bearish run right here, all the way since September, when we saw the DXY also showcase that strong bullish run. So based on the technicals right here, we did see a tight range around here. Price swooped down, ranged a bit. I think I should change things to white actually. And then we're seeing that continued move lower. I think right here what we're seeing could be a reflection of that as well. It could be mirroring that move, strong momentum come up, corrective move higher, or at least sideways movement, and then boom, once again, I do think the pound is going to continue dipping against the dollar. So this is a strong signature right here on the pound dollar. We close beneath this recent form support at around 1.265, and right now I'm expecting price to either retest this to go lower, or if we do a fake out by closing bullish above this previous area of support, I do think price has some leeway to come up into maybe this level right here to do a retest to continue lower, or it could just do a fake out, come back within the range, form any resistance, and then continue lower. Either way, I'm bearish on pound dollar as of now, but I want to see the technical charts showcasing to me that we are also going to be, bearish as well with a back end retest, or maybe upon Monday's opening we could just see price tank lower down into this next area of support at around 1.25 right here. 311, it's around a 100 pip move down to this level, and once we break that, we definitely could see price retest this week, and lower than that, definitely see price coming all the way down to around 1.2340. Okay, but we do kind of need to clear the wicks to the left hand side first. We have some equal lows right here. Definitely need price to close beneath that before saying that we are going to be tanking lower in just one fell clean leg. Okay, so that is pretty much it for the pound dollar really quickly, because I just think it's a great shorting opportunity, because fundamentally pound should be in theory weaker against the dollar, but of course if we don't see any technicals lining up, we cannot consider the trade idea high probability, because we are technically trying to time the market. So you definitely need that aspect of confirmation as a retail trader. Okay, all right, so moving on, we have gold. Let me just pull up the gold chart right here. All right, so here we have gold on the Ovenda data feed right here, and here's what I love about metals, especially the relationship between gold and silver, because when gold trends, silver often follows, and sometimes silver might even outperform gold in certain movements. But what's clear to me is that gold isn't a bit more predictable, but it's a bit more clean in how the structure forms. Some people of course might prefer silver. I personally have always been a guy that loves gold and prefers gold over silver because of how the charts form for my eyes, because like I said, it's completely up to self-preference. But sometimes, in terms of how much the asset actually moves in terms of percentage, silver, it actually moves sometimes more than gold. It's just the way that maybe futures contracts or the contract sizes, they are structured that makes gold seem a bit more active. So here we have gold on the daily chart, right? And we are caught between these two big structure points around 2718 and 2624, and we're just ranging and currently bouncing in between this range. Last Friday and Thursday we saw price reject this level, and we have two really big bearish momentum candles come into the markets to end the week. But unfortunately, as of now, until I see price break either side, I cannot call it a big structure break. Okay, we could come down and you could take a long setup for sure down at 2624 at this support, but always be mindful that gold is an asset class that, which is funny enough, it's considered low volatility when you compare it to a few other asset classes like stocks or even crypto, that's for sure. But when you compare it to like maybe forex, it's a bit more crazy. We have seen some of these big wicks come in right here. This is like a 280 point move right here. So there are times where you could take a long here, price could wick you out, but then still respect that level by closing above and then goes higher. Okay, so if you're looking to take a long around this area, it's completely valid because we are still in that range, and until we break that range, we can't say that we won't be looking for a bounce off of this level. It's just that when price comes down and then it wicks that level, you won't know when that wick comes in. You know, you could see price on the low time frames, maybe like the 1 hour, you know, trades lower and then fakes out and then it just goes. You may have gotten stopped out right here. So I'd say if you're looking to take longs around this level, definitely utilize low time frame confirmations, looking for buys right here instead of just placing a limit, stop beneath this low, because gold has this tendency to just wick beneath or above these highs and lows, right? So when you're trading gold, definitely try to wait for the confirmation in line with like a time of high momentum, like maybe London session or, you know, maybe New York Open. But to be fair, you know, gold also moves a lot during Asia, so it's a bit hard to say when the time of momentum is. It's pretty much entire day, to be fair. So longs beneath here are completely valid. If it does come up, shorts around here are also valid. But if we do see a break and closure beneath 2624, we do have this clean range right here of around 600 points down into the next area of structure, which is 2561. But vice versa, if we see a close above 2718, we do now have more conviction to say this is minor structure, we're breaking above this level. It should in theory carry us all the way up into 2787 to either break it or at least retest this structure right here. So for now, you know, definitely be looking for rangy or trade it within this range right here, because we don't know which side it will break out to. I did say that, you know, I technically was expecting a bearish run to continue down into some of these structure points right here, but as of now we haven't seen that, so I cannot say that we're going to be seeing it next week. But keep in mind, if we do break this, gold may not retest this and it could just go, you know, gold could just break it and then continue lower without showcasing you a pullback. So do keep in mind for that. Same thing here, gold could break this and it could carry itself higher before the year ends. Okay, but either way, this is a good range and this is also a pretty good range to trade from. Okay, but until then, we're just bouncing between these two levels. Not much for me to capitalize on as of now until we reach either side. Currently we're stuck between the middle of the range, and I personally don't like to trade when we are, you know, within kind of like the awkward positions of this range right here. Okay, so that is it for gold. Let's take a look at the next pair, which is the NASDAQ. Alright, here we have the NASDAQ, which is actually just the CFD counterpart of that, the US 100 on capital.com. And you know, last week, let's recap a bit about what happened essentially. Currently, you know, where we are on the NASDAQ is, you know, it's been a kind of tough for short-term traders, right? Because we're seeing this large movement higher, and you look around, you know, you're hoping for price to just dip a bit lower to go into longs, like around areas of structures, because everything feels so overvalued. You know, it's getting kind of exhausting, right? We're just praying for it to dip into better pricings, and so far it's just not been giving that. You know, markets have been moving up daily, and it's tempting to kind of just, you know, jump in longs around nearby areas of structure, but it's key in these kind of time periods to remind yourself that discipline is what's keeping you from taking preventable losses, especially in scenarios like this, right? We have seen charts like this on other asset classes, you know, things like crypto, things like maybe back in the day when we had that bull run in like 2018, 2019. We've seen charts like this which just seem a bit overextended and scary to jump into. And it's scary for a fact because it's just, for me, it's just super overextended, right? If you look at news releases online, it just seems like people are just telling you to just get in, just get in. Everyone's on the same side of like the boat, and you have to remind yourself that when everyone's on the same side of a boat, when sentiment is overwhelmingly bullish like this, the sudden risk of a sudden reversal increases because the boat tips, right? If everyone's on the one side of the boat tips. So keeping yourself grounded during times like this is definitely key in deciding if you're going to be like every other trader or if you're actually going to be a long-term sustainable trader, right? Because obviously we're bullish, right? Everything's bullish. PE ratios great, companies performing well in the tech sector, the AI trades are performing crazy well, but something's just fishy about this move, right? Everyone's telling you to just buy the NASDAQ, buy AI tech stocks, and then all of a sudden, if you get in, suddenly the market just dips. And as traders, we have to find the underlying trend or the underlying sentiment, and then look for good and reasonable pricings to get in. And as of now, when we've just broken the 21K mark, and last week, I mentioned that this could be an area that you could see price bounce higher to and find some kind of rejection at, which we are currently doing now. Even went all the way up to as high as almost 21K.9, and we did find that, right? So right now we're seeing this large, I'd say, indecision week, right? Price doesn't know where it wants to go from here. It's confused. It's showcasing a small body to wick ratio, indicating that we could be seeing a reversal forming this swing point right here. So that's something that could be on the cards next week. But like I said, everything's bullish. We could see a sudden drop happen for sure. We just don't know when it's gonna happen, but it's looming around the corner. Okay, so as of now, I wouldn't say buying here is a bad idea, but if you are even tempted or even looking to buy NASDAQ at these overinflated prices, definitely keep yourself in check in terms of your position sizing. Definitely be prepared to take a sharp loss when prices dips like that, if it dips like that, right? Always make sure you manage your risk. So supports at around 21.3K are valid, but if we do come down all the way down here and then we break beneath it with conviction, you could expect price starting that pullback. And looking left, we do have some nice momentum, or sorry, some nice clean range for momentum to carry us into around the 20.7K mark right here. Okay, so that is actually the reversal trade I'd be looking to get into if we do see ourselves, breaking lower from here into this next area of structure. I don't see anything that's stopping us. Okay, it could come down, of course, halfway, come off something like this, or even come off of nothing right here and just form a new support. For sure it could, right? But based on just historical data, there's nothing right here to tell me that we're going to be finding areas of clear support until this area right here. Okay, so until this area breaks, I'm just chilling. Okay, but definitely understand that if you do take a short-term sell idea, it's going to be a short-term sell idea, right? Everything's pushing higher and higher and higher. You shouldn't be looking to hold your shorts for an extended period of time, or if you do want to do that, that's fine as well. But at least as traders, always pay yourself small profits, if any profits at all, right? Because who knows how far it will tank from here. I can't be sure. I could be wrong as well. We could be tanking to hell from here, but at least based on market sentiment, based on the fundamentals, there's nothing signaling a a bearish run on the NASDAQ just yet. Alright, so coming next up, we have our last pair, which is Bitcoin. Right, Bitcoin is not moving anywhere and it has not moved everywhere, just caught within this large range for the entirety of last week. Okay, ever since it reached 100k, it's just been rangy, and this is to be expected, right? Whenever price breaks an all-time high, it's likely to consider for a bit. It's likely to continue for a bit, and then it's probably going to either range or do a pullback and then range, right? So as of now, we're seeing that range on Bitcoin, and things are still looking bullish. You know, Bitcoin is obviously bullish, right? Ethereum as well, and some of the other major cryptos are also gaining momentum. Paired with the fact that, like I said, Trump is a big name that supports the space, and with talks currently of regulations being eased, we might see even more growth in the near term, right? But here's the thing: this hype, it feels a lot like when I just got into crypto back in 2021. And remember what happened after that? The crash the next year, back in 2022, it hit hard. Right? It hit hard. I personally know a few friends that lost a lot of money in crypto. Right? And I'm sure everyone else also has friends that lost money in crypto, but I'm also one of them. I didn't lose a lot of money in crypto. In fact, I actually got some money out of it. But this is just a reminder that, looking back at how the markets have reacted, it's not to say that the markets will repeat itself, but I think the markets will rhyme most times. So while the market currently, zooming out, it's looking unstoppable, you have to understand that nothing goes up forever. Corrections are inevitable. They're going to happen. We just don't know when. Okay, so don't fall for the FOMO. Sure, some coins are up 50% in a day, 100%, 200%, you name it, 1,000%, maybe even in a week. Sure, but many of these are just pump and dumps, and they leave traders or investors with nothing but big losses. So when you're in doubt, just look at the leading indicator for crypto, really, which is Bitcoin. Right, if Bitcoin drops, everything else pretty much drops as well. So looking at Bitcoin, it's not going anywhere. So just hold your horses and relax for a bit. It's tempting for sure to get in before this big run, but look at how big this leg is. Don't you think that it's time for a slight correction before this move higher? Better pricing, safer range, better stop losses. So definitely look to hold your horses until then. Okay, so for now, there's nothing clear within this structure point, but we do have this support around the 91k mark, as well as one around the 86k mark. This personally for me is a great area to kind of look for potential continuation longs. This one is more so like a intermediate theory, kind of like a middle level that might react off of, might not, but it's not considered high probability for me. I prefer the ones like this, or at least it's just more so on a more reasonable pricing, right? Because if it comes down to 86, this is like a 14% drop from where we are, and if we dip lower than that, we're gonna be looking to potentially clean some of this range right here down into maybe previous all-time highs at 70k, right? Or maybe lower into 60k mark. But if it comes down here, it's a bit concerning, to be fair. I'd say ideally it should hold around here, or around this range right here should hold right here. But like I said, crypto can be crazy sometimes, so I don't really know where it might go. But just some of these areas are definitely there for you to take a look at. Okay, so yeah, a longer episode, 30 minutes in. I do hope that it has kind of, given you a bit more insights on what to expect in the next week. We are, like I said, nearing to the end of the year, so some people have actually just taken off already, but like I said, it's completely up to the traders' strategies, historical data, track record to tell them, if December is a great month or not for their own models. And if you're new to trading, just take my advice, if you will, lower your risk a bit when you're trading or investing, and don't expect too much out of the markets on an intraday / intra-week perspective. Okay, so all right, I'll see you guys in the next one. Peace.